This is what a real war usually looks like. And this is what a trade war usually looks like. But the pictures don't say it all, as the latter is not necessarily less costly and destructive. The most disastrous trade war in history actually never really happened. A war without smoke. In 1985, due to an explosive US trade deficit, a massive trade war between the US and its trading partners was looming large, but was eventually avoided. A peace agreement initiated by the US, known as the Plaza Accord, was signed by the US, Japan, Germany, France, and the UK, which were obliged to intervene in the currency market, helping devalue the dollar and revitalize the US exports. The US trade deficit was almost gone within the next 5 years. A happy ending for the US, but the story was completely different for Japan. In the same 5 years, Japan was accidentally triggered into what was referred to as the lost decades. Since 1990, its economic growth has plummeted from around 5% per year to around 1% over the past 3 decades. The potential loss to Japan? Suppose Japan had been able to keep its growth trajectory. This would be the potential loss to the Japanese economy, which is $122 trillion. The cost of a real war? The financial cost of World War II to Japan was $56 billion, which enabled Japan to invade and occupy 22 countries and regions with a population of around 400 million people. This cost, adjusted for inflation, would look like this in 2005. So, the potential loss caused by the trade war is more than enough for Japan to launch the military attack as it did in World War II, but over 200 times more powerful. Although the Plaza Accord didn't inevitably lead to the lost decades, even if 1% of the loss could be attributed to it, it's more than enough to show that trade wars could be more costly than real wars. While the dust is yet settled for Japan, now the US and China, the 2 largest economies in the world again, is on the edge of another full-blown trade war. So, why is this happening again? From the perspective of economists, since trade happens voluntarily, it's supposed to be mutually beneficial for both trading partners. But why do countries battle over trade? And why could ending trade be so costly and destructive? Why do countries want to trade? For one basic reason: they are different. Suppose one country is good at producing one product, the other country is good at producing another. Without trade, if they don't want to have a boring meal, each country has to produce both products and bear the low quality of the locally produced product. But with trade, the 2 countries can specialize in producing what they are good at and trade with each other. As a result, both countries spend the same effort as before, but are able to enjoy more of both products. A win-win situation. It really works like magic. Wait, no, magic is an illusion, but this is real. The trick is that specialization enables both countries to best utilize their resources, and trade makes it possible to realize the gains from specialization. But the story doesn't end here. Far from it. One day, after your meal, you might get a bit greedy and want to consume more without producing. Lucky you! With trade, this is possible, but you have to borrow from the other country. You can do so by importing from the other country, but instead of paying it with actual products made from your own blood, sweat, and tears, you can pay the other country with some golden, shiny, glittering money, which is not consumable, but with a big promise printed on it. This borrowing is called trade deficit. Your deficit through trade, the effort you owe to the other country through more imports and fewer exports. The other country needs to produce more without consuming more, but at the end of the day, its wealth increases because it can use the money accumulated for future consumption. But is trade deficit a bad thing? As it is essentially a borrowing? Not necessarily. It really depends on the purpose of the borrowing. If it is used for profitable investment opportunities, then it is a good thing. And good luck. If it is due to too much eating, it is a bad thing, as a lack of enough saving will hurt your future. Watch out! But trade deficit may sometimes occur unintentionally due to the lack of ability to produce. The problem is, complete specialization is an ideal situation that is too good to be true in reality. Each country will always have some people producing what the country is not good at. They will have to be ready to take the gloves off and compete with the foreigners who are superior to them in producing the product. In this case, trade will create winners and losers within each country. Some people will make a loss and other people will gain. This situation is often accompanied by a trade deficit that comes from the loser's industry as a result of the limited power to export. So, is trade deficit a problem, and should trade be supported in this situation? Different people have different opinions based on their different approaches to balance the winner's gains and the loser's losses. Economists treat everyone equally and compare the total losses with the total gains. Surprisingly, the total gains are almost always greater than the total losses, as trade gives each country more possibility, and hence the country benefits as a whole. So their answer is, trade is potentially good, because the winners have enough gains to compensate the losers, and everyone would say yes to trade. This is why economists usually support free trade based on the potential gains from trade, but do not touch on the issues of how to distribute the gains, a job which politicians have to face. So politicians' calculation is different, as the losers from trade tend to form a more organized and stronger lobbying group. They usually have a disproportionately large weight in the politicians' calculation. Once the loss or trade deficit in the loser's industry passes a certain threshold, politicians will tend to take sides with the losers to launch a trade dispute or even a trade war. This is usually done through setting up trade barriers to protect the losers, such as increasing tariffs on foreign imports. And this is exactly what has happened in the history of the US trade wars. It's like a game of mole attack. The US tends to launch trade wars against countries that deliver a big deficit to it. Each whole pizza stands for a trade deficit equivalent to 1% of the US GDP. The US had a very balanced trade with an almost negligible trade deficit until the late 1970s, after which its trade deficit soared rapidly, with the majority of it coming from Japan, especially in the auto industry. In 1981, the US imposed intense pressure on Japan. In response to that, Japan agreed to a voluntary export restraint program, which means that it voluntarily imposed quotas on the number of automobiles it exported to the US. In 1982, the US started the decades-long trade dispute with Canada over wood products, as Canada was consistently the top contributor to the US trade deficit in that category. In 1985, President Reagan raised the tariffs by up to 40% on imported pasta from the European Economic Community, mostly from Italy, retaliating the community's discrimination against the US citrus. Since 1981, although the voluntary export restraint program effectively reduced the trade deficit in the auto industry, the US still had a large trade deficit due to Japan. To make things worse, from 1980 to 1985, the US dollar appreciated by around 50%. The trade deficit shot up accordingly. Major US exporters, including IBM, Motorola, and Caterpillar, devastated by their export numbers, launched a massive lobbying campaign urging Congress to protect them by passing new laws. In addition, the White House initiated direct negotiation with its trading partners, which was turned into the Plaza Accord. The US trade deficit was almost gone within 5 years. However, it caused huge turbulence to the Japanese economy. Immediately after the Plaza Accord, the yen appreciated sharply within the first year, causing exports and GDP to stall in 1986. In the imminent danger of a serious recession, Japan introduced an unprecedented macroeconomic stimulus. Within just 1 year, its central bank reduced the policy interest rate from above 8% to below 4%, a level which turned out to be much lower than what was needed. In addition, extra government spending designed to increase GDP by 1 to 2% was introduced in 1987 to compensate for the loss of external demand due to the yen's appreciation. These policies quickly helped Japan recover from the initial crash, but due to the excessive concern over the impact of the unprecedented appreciation, the massive stimulus was not withdrawn until 1989, when it was too late. To make things worse, due to the ongoing financial deregulation in Japan, large firms gained the access to capital markets and didn't have to rely on banks for funding. As a result, banks had to lend to real estate developers and buyers, leading to an explosive credit growth in the real estate market. The share of loans to the real estate market grew from around 6% in 1980 to around 12% in 1990. This, combined with the massive stimulus, helped the formation of an extraordinary asset price bubble, followed by a very painful burst in the 1990s. The Japanese economy hasn't been able to recover ever since. In 2002, due to a large trade deficit in steel, the Bush administration launched a trade war against the rest of the world by raising the tariff on steel from 0% to between 8 and 30%. The action was withdrawn earlier than originally scheduled after the sanction from the World Trade Organization and the retaliation from the European Union. In 2006, the US had the largest trade deficit in history, with China being its largest source. Time for another trade war? Not this time. Due to the breakout of the global financial crisis, the US consumption power deteriorated rapidly. The trade deficit was automatically reduced during the crisis. But since the global economy recovered, the US trade deficit problem reappeared. In 2018, the Trump administration initiated a trade war against China. The two countries escalated the trade war by raising tariffs one after another. As a result, imported products became more expensive. Although local industries are protected, the country as a whole cannot enjoy cheaper and better products from abroad. Apart from the affected industries, the trade war also caused huge disturbance to both economies. Since the trade war started in January 2018, both the US and China's stock markets have experienced enormous volatility. The uncertainty will make it even harder for the two countries to offset the negative impact of the trade war, as the stake has changed from a few industries to the whole economy. This is especially important for China, which has just experienced a growth rate of 6.6% in 2018, the lowest in 28 years, and is now taking a series of expansionary measures to tackle the slowdown in the economy. Since 2018, its central bank has cut bank reserve requirement ratios 5 times, releasing 3.35 trillion yuans, or around $500 billion into the financial system. In addition, the government's also cut over 1 trillion yuans, or around $150 billion in taxes for the private sector, and promised further tax cuts in the next couple of years. However, estimating the appropriate stimulus package remains a challenging task. Just like in the case of Japan, designing an appropriate policy response with massive uncertainty is extremely difficult and prone to errors. Although the scale of the trade war itself may not be large compared with the size of the economy, any error in the policy response may cause an extraordinary disaster to the overall economy. Globalization and free trade have brought us tremendous success for the global economy. The world average tariff decreased dramatically during the past 2 decades, and trade has become a main driver of the global GDP, with the trade to GDP ratio increased to more than 40%. We are currently in an almost complete free trade environment. The transition from the current state to a complete free trade environment can only bring 1% increase to the global GDP. As the gains from trade are depleting, trade disputes are on the rise. Since 1995 alone, more than 500 formal trade disputes initiated by over 50 countries have been brought to the World Trade Organization. Trade negotiations have also become harder and slower, as the negotiations need to not only talk about the country's gains as a whole, but also balance the winners and losers within each country. Hope this is just a healthy correction for globalization. Countries can take the chance to release the tension and have further communication.